What is good, Tesla family? It's Ray J back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and many other tickers. I'm going to break down what's happening to the overall market, what the Fed and Jerome Powell just announced that caused the whole market to get rug pulled, what the news is saying about Tesla, and what you should be watching for tomorrow for all these different tickers, as we have some very bearish looking signals developing. But before I break anything down about all this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon, ends in just about 7 days, so check it out before they run out. Anyways, let's break down what's going on with the market and Tesla. So when it comes to Tesla, I told you all in the morning that we might see Tesla pop a little bit, then start to trade very sideways as we got very close to the big event. Instead, Tesla didn't just pop from the start, but we got a nice pop later on, but it did reach my target breaking above this 272 area. So it did do something similar to what I was predicting, but it didn't really chop as much as we got closer. It started to chop just a bit the hour before we ended up seeing the big announcements by the Fed. So then at around 2 o'clock p.m. Eastern time, the Fed announced that they are not going to be raising rates during this cycle. So the market ended up actually dropping initially based off what the Fed was about to show us, and then it ended up making a full recovery essentially. So Tesla ended up pumping. Actually, Tesla turned green and started continuing to pump, and it actually remained green almost the entire time after that decision was made. But then something else happened. I warned everyone about this. Jerome Powell was about to open his mouth, and when the guy spoke, the market would make a very big move. I didn't really predict what would happen. I told you it all depends on what he says. If he pumped the markets, we could have seen Tesla pump quite nicely. And if he gave us the rug pull, that could have caused a very big amount of downside for the markets. That's what ended up happening for today. We saw Tesla go from almost 274 a share all the way down to 262 in just a matter of an hour and a half. That's a very big drop in such a short period of time, and just goes to show how impactful Jerome Powell's voice could be alongside the Fed's policies. So I want to break down what the Fed just announced, what's going on for tomorrow and everything like that before I talk about the charts. So for tomorrow, we have initial jobless claims coming out 1 hour before the market opens. The jobs numbers are the only really significant thing. We also have existing home sales coming out 30 minutes after the market opens, but I don't expect that to be too impactful. For initial jobless claims, this is the biggest piece of data for tomorrow. We want this to be between 222 and 225,000. We need it to be somewhere between that. If it's too low, this could incentivize the Fed to be even more hawkish and cause the market to slow down. So be very careful with that. Now, the Fed also gave us the summary for economic projections, and they basically told us that they are likely going to be holding rates higher than expected. They may give us another rate hike as time goes on, as most of the Fed members are anticipating another rate hike to come. And they're telling us that not only will they raise it again, but they may have to hold it up for longer to slow down inflation, because once again, the economy is stronger than expected. It's not contracting as fast as what they want. The unemployment numbers are not looking like what they want them to be. And there are some signals of inflation possibly starting to uptick again. That is something that Jerome Powell mentioned. And that's something that the Fed has to monitor very, very closely before they make the true full-on decision. But they are expecting to raise rates again. That's the very important thing. Now, you can see right here, they're basically mentioning that it's going to take a while before we start to see inflation meet their targets. It may take another year or even longer than that. So that's very important based off their projections. And they're not planning on cutting too much next year, just a few cuts here and there. The bigger cuts are going to take a lot longer than that, according to what the Fed is projecting. Unless things start breaking, then they could start cutting early. That's when they start to pivot. So we're going to be watching to see if that ends up being the case. The Fed is also telling us that because of this, they may have to raise rates sooner than expected, and maybe even give us more rate hikes, at least one more for the end of the year. For that reason, the market is starting to price in another potential rate hike for November, and possibly even one for December, or at least for them to raise at least once during those months. So either November, they give us one rate hike. If they don't do November, it should be December. That's what the market is starting to think. One more for the year. So that is becoming more likely. We can see these probabilities are changing, and the Fed is becoming more hawkish. Now, looking forward, one of the reasons why the Fed was like this is when you look at inflation, the blue line right here shows all items starting to uptick a bit thanks to energy. And if you look at all items without food and energy from the core side, it's very sticky right now. So the Fed is a little concerned about this, and there is a risk of inflation potentially going up again. So for that reason, once again, in conclusion, the Fed is likely going to continue to remain hawkish. They're going to remain restrictive for an even longer than expected period of time, and they may have to give us another rate hike before the year ends. That in turn is not what the market was pricing in. This was kind of like a little different from what the market was expecting. And this is part of why the market is selling off the way it is. Now, on top of this, when it comes to Tesla, some good news I have for everyone is that the demand is starting to go up as we're seeing Model Y inventory levels dropping alongside the X, the S, and the Model 3s. That is good for Tesla because we're starting to see more sales as time goes on, which is a good sign for them. And we're going to get very close towards that uh, the very, very end of the year, the last quarter, which could be a lot better for them. Now, there's been some talk about a Cybertruck police car that could be on the table. I think that would be pretty cool. I mean, imagine getting chased by one of these. It would look pretty cool, if anything. And if this ends up being the case, I mean, it's something that's worth noting. I mean, there could be a lot of electric police cars coming out in the future. Who knows? But if that ends up being the case one day, that would be very, very cool. And this could benefit Tesla big time. But they're going to need to make a lot of improvements to their specs and etc. for that to be the case. We'll see if anything like this were to happen. But once again, it's still very, very cool stuff. Looking at Tesla, we had 122 million in volume. Tesla had very high volume as it started pumping in the very beginning. And then Tesla started to sell off pretty hard. We saw aggressive selling. So it all came together thanks to the overall Federal Reserve. Now, what else is decent would be the price relative to short volume is still a little bit high up here. So there's still a lot of shorting going on Tesla, and it's not as aggressive as before, but it still is relatively hot. Goldman Sachs is neutral on Tesla according to their latest rating. The price-price ratio is still very flat for Tesla as it's performing very equally to the market. Then looking at some daily seasonality, Thursdays tend to be green only about 48% of the time, so a little bit weaker than before. Tesla also tends to see high volatility during the fourth hour of the day or around noon for the Eastern time or around 2 o'clock p.m. Last but not least, when you look at the short interest, we're seeing a little bit more shorting on Tesla as the shorts could be getting ready to drag this thing down. So what does this all mean for the share price? What's going on with Tesla so far? And that's why I want to just break something down that's very important. For Tesla, it's not looking that great from a technical standpoint, at least for the bulls. In my opinion, the chart always looks good as there's always opportunity. But when I say it's not looking that great, I'm referring to for most people who are going long and trying to hold their shares. Right now, we have this rejection candle that developed on it, and we have a potential loss of momentum that's developing and a potential bearish cross on the PPO that could be pending. Now, in my opinion, it looks to me like Tesla could get a back test of this 265 area before it continues to sell off. And we're going to be watching the 20 EMA at 259 and also 257. If Tesla loses 257, I see it coming down to fill the gap very soon, all the way back down to the low 250s. And I think there's a good chance of that happening relatively soon. So I think Tesla's looking more bearish. We have a bearish looking daily candle. And I think that because of the Fed, there could be more downside potential. Now we're going to be watching for a little rebound first before this thing continues to sell off. It looks like it could be testing 260 very soon, and potentially even 257. And if those all break, then we're going to likely come even lower thanks to the gap fill below. So it looks more bearish overall for Tesla. Now, also on the 4-hour time frame, it's looking more bearish on the PPO, very, very strong looking drop. And we're going to be watching this gap down here. Tesla may fill this gap very soon. We have a potential head and shoulders that also develops today. This could lead to more downside. Tesla could be coming down very, very soon to fill that gap, looking more bearish. As far as SPY goes, look for this little dead cat bounce, towards this 439 area before this thing gets another rejection, but there's not really much support until we get very close to between 435 and 436, closer towards 436 though. So I think SPY is going to sell off a little bit more before we start to see some buyers attempt to step in, at least to try to defend their positions. So watch for a little pop, then a drop on SPY. It looks very more bearish, and it looks like we have this daily bearish engulfing candle that could lead to more downside towards that 436 area very, very soon. Looking at some other tickers out there, such as the IWM, it has that gap down below right about here. I know it's a little hard to see. There's a gap down below way down here as we have this head and shoulders pattern. So it's just like this. We have this head and shoulders, and you can see we have this gap right here that could get filled, taking it all the way down towards this 175 area. So the Russell does likely have more downside coming with this head and shoulders formation. Looking at Aapl stock, it's also looking weaker as we have a head and shoulders developing on it now. And unfortunately, Apple failed to get the meaningful bounce it wanted to get. And now with the Fed rug pulling the market, we could see Apple tank towards this 173 area. Look for a little backtest of 176 before it starts dropping, but I could see 173.5 very soon. The QQQ has a bearish engulfing candle as well. You could see how bearish this is looking right now. Look for a backtest of about 366 or so, then it may continue to sell off towards 361. That's going to be the next very important support to be watching for. 360 to 361. I think the QQQ has more downside likely pending. Nvda is also looking more bearish on the daily charts. We could see this thing making attempts to rebound again, could be testing 425, but overall the trend looks very bearish. There's no true sign of a bounce just yet. So the next levels to watch for are going to be technically like 420, which is not that strong, 416, 410, then potentially even 403. Those are some important levels, and I could see more downside for Nvidia because of that. Now, even if that's the case, there should be some buyers stepping in some of these levels. Specifically, I'm going to be watching this very, very low 400 area. That could be where more buyers try to step in. Microsoft is also looking weaker with the bearish engulfing candle. We're going to be watching it retest 321 before potentially rejecting and coming all the way down towards this gap down here. We have this gap down at 316. I could see Microsoft starting to sell off for the next couple of days. AMD is currently about to test its 200 EMA. If it breaks below that, we're going to be watching it come all the way down to 97 or below that. So watch that very carefully. It was looking bearish on the daily chart. Netflix is looking more bearish. We ended up failing to hold 390, and this thing is, in my opinion, approaching 377.5. It's continuing to free fall, and there's likely going to be more downside coming, especially as we approach these imbalances down here. So I could see 377 and 375 being tested. It looks more bearish overall. The VIX managed to close above the 50 EMA on the daily chart. This is significant because if it continues to hold above the 50 EMA, which is currently at 14.8, the market tends to be on a downtrend, right? So right here, the market was on a downtrend. Then the market ended up approaching an uptrend as we got that bounce to start off the end of August, and now it's starting to close above the 50 EMA. So that's a signal that the VIX may start to uptrend, which could be bearish for the markets. We have a bullish cross on the PPO, which is another bearish signal. That is something that's worth noting. The dollar is also starting to look bullish on the daily chart, continuing to make higher highs and higher lows with no true sign of weakness. So for that reason, with this potential bullish wedge attempting to develop, we could see the dollar push even higher. That could end up leading to more downside for the stock market. Coinbase is looking more weak. We're going to be watching 75. If that fails us, 72 is likely going to be on the table as Coinbase continues to weaken. Google's looking very weak with this bearish looking candle. We're going to be watching it come down to fill this gap around 132, if not even below that, towards that 131.5 area for the 50 EMA test. Amazon's looking weaker. We're going to be watching it potentially test this 134.75 area. If that fails us, we're going to be watching it come all the way down towards this 132.5 zone. Amazon's also looking weaker. And don't forget that I think we have this gap down here in Amazon, this unfilled gap down here at 128. So there could be more downside coming. But it has to break and hold below the 50 EMA to hit 132 first before we talk about that gap. Still looking more bearish overall. Also on Meta, I was talking about a very important zone earlier. I think on the 4-hour time frame is where I was looking. Meta is looking weaker. We're going to be watching this 200 EMA. If it ends up losing it, it's going to likely come all the way down towards this critical zone down here around this 295 area. So it looks more bearish to me. We got this very, very big drop. We're going to be watching the support, though, around this 298 area. If that fails us, we could be watching the mid 290s. So as a result, guys, the market is looking weaker. I know Tesla's trying to pump into after hours, but like I said, it has that big gap, and we're seeing a lot of shorting on Tesla. We have a possible head and shoulders developing. Even if Tesla tries to get a dead cat bounce, there could be more downside coming. We have this gap way down here. We could see 250 very soon. I know it's not what you want to hear, but it's looking weaker now, and the Federal Reserve is one of the main reasons behind that, not to mention the seasonality. The market does tend to sell off during this time of year, so it's going to be very important to be prepared for this. All right, so Jerome Powell has made us have to adjust our TA and adjust our targets because of the fact that he announced things that were not expected, and that inflation is once again continuing to uptick, not like how the Fed wanted it to. So we have to be prepared for this. We have to be open-minded, and we have to do what's best for our own portfolios. So thank you for listening. Have a great day. Do what you have to do, guys, and I'll most definitely see you guys in the next one. Thank you. Tesla and the markets to the moon, because the long term is still incredibly bright despite these short-term pieces of downside that we're likely going to see. And peace out.